This is Artemiev with the Bulletin Board Heroes here at Vox Markets for Thursday, the 11th of August. And the FTSE still struggling to get through the 7,500 level. We had a few spikes up to 7,520, but still the area of that lower resistance line there from April in play. And I suppose you could argue that we're sort of bouncing off that. Next level up is that resistance line, the slightly higher one up there to 7,600. So at the moment, if we can stay above the 74.70 area, then we could get up to 7,600, and I suppose that's where the real battle will be, because that's basically post-February resistance. On the downside, initial support there, the rising 200-day moving average at 73.80, and I suppose given how long it's taken for the market to make progress over the last week, we might have the risk of a dip to that zone, which I suppose technically would be potential entry point for longs who've missed the boat so far. It would be nice if the 50-day moving average there around 72.86 started to trade upwards, because that would mean that we're up into the running up to a golden cross, but still that could be a week or so away if that actually happens. On to Bitcoin, where you can see that we've got the same old range going for this market. What's interesting is that we had that brief dip to the rising 50-day moving average that actually reaffirmed the fact that we're potentially heading up, or the possibility that we're potentially heading up. So a great hammer candle there for yesterday's price action. Just want to see an end of day close above recent resistance around 25 or 24,500. If we can do that, initially we're up to the old May support 25,500, and then hopefully by the end of the month up to 28,000 or so, which is the top of that falling November resistance line. Breaking that would then change the trend that we've had since November, and obviously be a reason for celebration, but let's see if we can actually get up there below the 50-day line there at 21,800. Then there's the risk of a retest of July support, the double bottom there around 19,000. On to the stocks, and the good news is that many of the stocks here have actually exceeded the triangle targets that we had. So this one here with Artemis hitting that line there, I think we were sort of looking for that when it was around 2 pence, and we actually hit the 3.4 pence target and exceeded it. We're above the 200-day moving average now at 3.2 pence, and if we can get an end-of-day close above that, we'll be looking towards the old resistance from April, around 4 to 4.2 pence, hopefully by the end of this month. Obviously, we've come up a long way and we're vulnerable to a pullback, but end of day close above that 200-day line would be very useful indeed, and give the bulls here who've suffered a bit something of a bonus. The other point to note here is that this was actually an island reversal, so we gapped down and then gapped up, and normally the rule is that when a stock or a market breaks the high of the gap up day, in this case it was 2.15, then there should be a decent rally. So that's sort of, I call that the sort of the rocket launcher move, and it was a bear trap gap reversal as well. So everything in there, including bullish divergence, which has been in place for quite some time back since May. Multi-tested bullish divergence line there, so that was the leading indicator on a big move, and that's the wonder of bullish divergence. Onto a stock which I don't think I've covered before, but it looks like it's turning around here. We've got Boku with the bullish divergence line there from back in March, which is great. Bear trap reversal, bear trap gap reversal there, so we had an unfilled gap to the upside off the low, and that day there was around 90, the high there was around 95 pence, so breaking 95 had the initial target up to around 108, which is where we are now, and end of day close above the that resistance line there from November could take the shares up to £1.40 as soon as the end of next month. Stop loss at the moment, the best place probably just back below the 50-day moving average at 102 or so. Moving along to another situation which is in focus. I've noted that obviously somebody's trying to get the Audioboom share price down with various points and bearish points. Obviously, they're already down from £22, so perhaps it's going to be difficult to get the stock any lower. The saving grace for the bulls at the moment, if there are any left, is that late 2020 support line there. That's running around the £6.40 level, so the stock really needs to hold that on an end-of-day close basis to maintain, let's say, the uptrend line there from 2 years ago. Looking more closely, you can see that the lows so far in July was down at 602. So I suppose that really is the stop loss for anybody who is daring to venture into this situation. We do get a rebound, which at the moment is obviously something which is a cause of speculation. The initial resistance there back at around the 730 area. We want to see an end of day close above that as a momentum signal if you're a fan of Audioboom, and then that would take the shares up to the 50-day line at £9. But obviously a situation which is curiously bearish at the moment. We did have a weak RSI buy signal, so we broke that RSI trend line from back in June, but obviously the follow through not great. But everything here really hinging on 640, 650, and that 2-year uptrend line. Moving along to a stock which is on the other end of the scale in terms of bullishness. Here we had Cordel, which unfilled gap to the upside there after a sort of double bottom bear trap as well below the March support. I think I talked about this before. Broke that line of resistance, and the break of the gap up day was around 6.4 pence, and obviously we're motoring now. The target there up to 10.5 pence, hopefully over the next few days. Stop loss recent resistance from July around 7.3 pence, above 7.3. Looking for 10.5 or 11 for Cordel or Cordel by the end of this month, or hopefully even sooner. Onto a requested stock. We've got a couple of requests today. If I can get the right ticker code, EasyJet. Here the shares had a little bit of a rebound. Bullish divergence gave us the rebound there, but struggling here at the 50-day moving average and that February resistance line. You want to see the shares clear the 415 area on an end-of-day close basis. If they can do that, the target here would be up to 465 by the end of next month. Obviously, if you're already in the shares, recent support 390 is the obvious stop loss there. Saving grace really in terms of the shares potentially moving higher is the way that the RSI is now in the mid 50s, and that should above neutral 50 gives a leading indicator. It still tips the shares towards a potential break higher. If the RSI falls below 50 over the next few days, then probably one would have to give up the idea of a move towards 465 over the near term. Next up, Europa. And here it looks like after a lot of consolidation over the last few months, the shares are ready to break to the upside. Got a rising trend channel and a rising 50-day moving average. That suggests that above the 50-day line there at 2.35 pence, we could head up to 4.5 pence, perhaps as soon as the end of next month, hoping for a move to echo what we saw in January to February, where we zigzagged up towards the top of that 2021, well, 1 year rising trend channel. On to another requested stock, Genflow, which currently grappling with the 50-day moving average. We had one 50-day line failure back at the end of last month. We're trying again, and that would suggest with the bullish divergence that there's a chance that while we remain above recent support around 2.4 pence, there's another chance of retesting last month's peak near 4 pence, and then maybe the top of that falling trend channel at 4.5. But 4.5 looks like the best the shares could manage over the near term, while they remain above 2.4 pence. Just need to see that 50-day moving average starting to rise to maybe confirm that this could be a near-term low for the shares. Moving along to yet another stock which has exceeded expectations, something which is wonderful, I think. 45 pence, the initial target here, which we had really when the shares were in the mid-30s. Best case scenario target was then up at around 60 pence, and we've managed to beat that as well. I think that was just from a week or so ago. And we can actually maybe upgrade Igas a bit more with this resistance line projection, which seems to be rather ambitious. But as I said, so far the share has actually exceeded expectations. That suggests that we're in a rising trend channel from back in January, and really above the old peak there from April around 48 pence. Looking for the shares to hit as high as 110 pence, perhaps by the end of next month. If you want a closer stop loss, then probably the initial August peak there at 52 pence is about the nearest that you can manage. We've got the 50 and 200-day moving averages both rising in parallel, which is the equivalent of a golden cross. In fact, sometimes better than a golden cross So that does give heart that we could head higher. If you're not in it, maybe wait for a dip towards the low 50s before taking the plunge. And ideally, we have an end of day close above 60 pence to firm up the idea of 110 pence being on the cards over the next 4 to 6 weeks. Moving along to a stock which is not in quite such exuberant mode at the moment. We have Midatech Pharma here. The 50-day moving average is flat, so it's sort of a shuffle along the 50-day line. If we stay above that at 9.8, there's at least a chance of a hit of that February resistance line there at 12 pence. But at the moment, still very, very cautious. The shares could just like flip down, which is something that can happen in very bearish situations. But benefit of the doubt here while we're above 9.8 on Midatech. On to Quetzal, which is one of the few tradable and active stocks on Aquis. Here we've got the shares with a very nice looking U-shaped or saucer-shaped reversal over the last month to 6 weeks. We've got the 50-day moving average rising, which hasn't done for quite some months. I suppose the last time was back in April. And above the 50-day line, 3.3 pence, we're looking towards, yet again, towards the top of that broadening triangle up towards 6.5 pence. It's a shame we didn't get there before, but we actually had a look. We were looking for that back in April, May. Let's see if the shares can do this the second time. That pattern there, though, that saucer-shaped pattern, gives us hope that the shares will be able to deliver on this occasion up towards the 6.5 pence area. Overall, the price action here backed by bullish divergence, a very long line there from back in October, and that also gives cause for optimism, as well as that very brief bear trap below 2.5 pence, or below 2 pence, I think it was at one point, back in June. A couple of stocks to go now. First one is one which is looking quite healthy at the moment. Tissueregenexx. Here we're in a situation where we've got the rising 50-day line. We've broken above the 200-day moving average as well. That's around 0.47, but above last month's high, 0.51, looking for the top of that rising trend channel from back in November, as high as 0.7 pence, maybe as soon as the end of this month. Finishing off with Tintra. And if I can type it in correctly, here we've got a situation where nice bouncing action there on the 200-day moving average at 130. Above that, looking for a retest, quite simply, of the resistance last month, and I suppose post-April resistance at £2. Maybe see that by the end of this month if we're lucky. And longer view, 1 to 2 months, maybe up to £2.80, which is the top of that broadening triangle from back in January. So a very strong looking position at the moment, especially while we remain above the rising 200-day moving average. That's it from me today. More updates tomorrow.